What is happening, people? It is the 21st of April, and yesterday some absolutely crazy stuff happened. Yesterday, WTI crude oil fell from about $15 a share, which is already ridiculously cheap, to negative $38 a share. How is that even possible? How can something like oil cost negative money? Hey, shopkeeper, can I just have this half-drank bottle of Pepsi Cherry, please?
Yeah, that's gonna cost you negative $20.
What you mean? Oil costs negative money right now. Oil is one of the most traded commodities in the world. It's a massive, massive, massive industry. And in today's video, I want to speak about what's happening. Like, why has this happened? This has never happened in the history of the whole universe. And most importantly, I want to speak about how we can profit from it. What stocks we should buy, what stocks we should stay away from, everything along those lines, because obviously that's what we do on the channel, baby. We try to buy them stonks low and make those dollars. If you enjoy the video, please smash a like right now. We're on the road to 1,500 subs, baby. Please drop me a sub if you're new around here. Stay up to date with all the content, baby. And after you've watched this video till the end, drop me a comment with your thoughts on this whole situation, because it is absolutely crazy. Oil plays some involvement in some degree, pretty much in every single product in the world. This Pepsi Max Cherry, oil would have been used, to help create this first of all, the machines that would make this. Then oil would have been used to drive the truck or fly the plane that would have got it to where it needs to go. So it's not just, your petrol. There's way more to it, and we can see that right here. A partial list of products made from petroleum of 6,000 items. Ink, food preservatives, nail polish, golf bags, pantyhose, baby, deodorant, life jackets, dyes. It goes on forever, but basically it's in a lot of things. So why is this happening now? Remember when this happened about a month ago? Oil plunges 24% for worst day since 1991. It hit multi-year lows after OPEC deal failure sparks price wars. Funnily enough, it has essentially absolutely nothing to do with this. This day in itself was crazy. It was the second biggest single day drop in oil ever, and it is as a percent, not as a total cost, so that's obviously important. Obviously, as things get more expensive, it's easier to see bigger cost drops, but this is as a percentage the second biggest day ever in history. Ever since all this drama, with Saudi Arabia, the Russians, OPEC, ever since all of this has been going on, there's been loads of speculation in the market surrounding oil stocks. Some people thinking that they're going to boom, some people thinking they're going to completely die, everybody's going bankrupt. There's just been a lot of speculation, not much useful information out there. But anyway, why is this happening as of right now? Why are oil prices gone to negative $38? It is really, really, really simple. It's the absolute most basic of economics, supply and demand. And let's just think about it on a small scale. Every individual, most people drive or whatever, yeah? You're going to be driving far, far, far less now than you were 2 months ago. You're not driving to work. You're not going on long road trips with the family. You're not going to the shop anywhere near as often. 95% of the time, you are just stuck inside your house. So you are spending less money on, petrol. And then let's kick it up a notch and look at the cruise line industry or the airline industry. They guzzle this oil up. But now they're obviously buying far, far, far less oil because they're not running. There's not as many planes, and all of the cruise ships are just docked. The demand just isn't there, and the supply hasn't changed, and that's what we'll get into next. But people are pretty much in lockdown all over the world right now. They're not using oil related products, in specific the main one, petrol and fuels. The supply of oil is higher than it's ever been, and the demand is lower. Do you remember only about a month ago, Saudi Arabia started actually increasing their production, increasing their barrels per day, and underselling the rest of the market when they couldn't come to an agreement, with the US, Russia, all of the big players. They actually started producing more oil, so there's literally more out there than ever before. And we're looking at this, the last pretty much 15 years, we can see that oil production has gone up because the demand has gone up, but what's happened is very, very, very swiftly, the demand has gone down to the ground, and they haven't been able to slow it down at the same pace. These companies are still producing as much oil as ever, but they've nobody to sell it to, and they've nowhere to store it. The world's biggest oil storage firm says it's almost all space sold. We are simply running out of places to store oil, and that's why they're literally having to pay people to take oil off of them. Oil companies are spending a fortune to store unused crude at sea. They're going to store this wherever they can, because obviously they don't want to have to pay people to take their oil, and they don't want to have to sell it really cheap, so they need to find places that they can store this oil to then sell at a good price later on. When the flights are back up and running, when you need petrol for your car, when the cruises are going, when people are actually buying oil again. Some 160 million barrels of excess crude are now being stored on ships. Rates to charter these vessels has doubled in the past month, sometimes reaching $350,000 a day. That is why the cost of oil has gone negative. Oil companies spending millions of dollars every day to keep pumping oil and store it on boats. So the reason they're doing this, they have to pay to store this oil in hopes that eventually oil prices will go back up, which more than likely they inevitably will, and then they'll sell it on at a better price than they've stored it for, and they will ultimately still make money. So obviously in the short term it's horrible, they're making absolutely nothing and they're spending loads of money, they have way more money they have to spend to keep their oil, but in the long term each one of these barrels may still be profitable. This is thought to be the most unused oil being stored at sea in history. The last that came close to this was during the 2009 financial crisis, when roughly 100 million barrels were stored. We're already at 160 million. So that's why the price went to negative 38. Supply and demand. It's simple, it does not need to be any more complicated. Now what we need to understand is, as traders, how does this affect us? How can we make money from it? I think if anybody tries to tell you for certain how you can make money off this, they're lying. Nobody in the world has ever seen a situation like this. We don't know what's going to happen next. We can only go based off our expectations and our speculations. It's that simple. But look, it's already rocketing back up. You know, we finished at 38.10 and today it actually went back into a positive number and is currently sitting at negative $5.7 after market. But anyway, that's not very important. I have no clue what's going to happen next here. I'm not even going to try and predict it. But it's going to be crazy, I'll predict that much. But what assumptions would I make? Well, the companies that have oil as one of their biggest expenditures could potentially benefit. They'll get their oil cheaper, their expenses will be lower, their profits could potentially be higher, and given the situation we're in right now, horrible economic time we're in with so many companies struggling, the potential for so many massive companies to go bankrupt, every little could help majorly. Let's look at Delta Airlines for example, we could look at Carnival, we could look at any plane or cruise. They're going to benefit more than likely. We all know Delta has taken on loads of extra debt just to be able to survive going forwards until they're up and running again, until they're flying their planes again. And what that means as an investor is that even when they are flying again, there's no hope that we're going to be getting dividends, there's going to be any share buybacks, the stock price might not move very quickly. But the sooner the company gets profitable and starts releasing good earnings again, which could be helped by this situation, by the fact that their expenses will be lower because they're going to get their oil cheaper, then we will see the benefits. Obviously, I think a lot of people are going to be looking directly at the big oil giants, the small oil companies that have potential for huge growth. But I just think, as a whole, airlines, cruise lines, pretty much anybody in transportation will benefit. Because just think about how much money these companies spend on oil every year. Their stock price won't see any of this benefit, probably for 6 to 12 months, you know, until we're in profit, until we see how much they're saving on oil, things along those lines. And again, this could just be completely false. This is just an assumption I'm making. But to me personally, it definitely is another reason why I would buy these particular stocks. I've spoken about them loads in the past. You can check those videos out in the description if you want. But yeah, it's a good sign for companies like these who are inevitably going to struggle. But in particular for a company like Carnival, who's had to take on so much debt at really high interest rates, this is a promising sign, and in my opinion, their chances of survivability have just gone up. Obviously, depending on when the economy opens back up, when they can start doing cruises again, but you know, it's a good point for them. And one other thing that I could see potentially happening here is this could help speed up the economy as a whole. Take the everyday person who spends a lot of money on petrol for their car. This is probably something you all hate spending money on, but you have to do it, you know? You need to have your car to go shopping, to get to work, everything like that. Ultimately, you're going to be spending less money on a weekly basis on petrol, which will leave you with extra disposable income that you could be more inclined, you know, to go to a restaurant or to go to the cinema, to feed that money back into the economy. Whereas if those prices stayed really high and you have to buy that petrol and it's going to put you under financial struggle, you're not going to have the disposable income to go out and feed your local economy, whereas now you may well do so. So as a whole, I think this is actually going to benefit an awful lot of people. And it could be the difference between some of these small companies going bankrupt or staying alive. Now, let's get to speaking about oil stocks in particular, you know, the actual stocks that are involved purely in oil. A lot of people have been speaking about oil transportation companies as of late. And I don't see the value in those companies, especially not with what happened just yesterday. I have no interest in them, so I'm not going to be covering them. But yeah, always do your own research obviously, but they're not one thing I want to look into. Murphy Oil Corp is a company a few people have asked me to have a look on. I've just had a really quick look, some initial inspection. It doesn't look very good to me. It doesn't really fall within what I want to buy. I might look into it a little bit more in depth, and if I find some more information, I'll make a video on them. But for now, yeah, I'm not really going to be touching off anybody like this. I don't really want to touch any company that has a share price under $20 that has any relation to oil right now. The chance of bankruptcy could potentially be so high, and I just see so many safer alternatives out there. It doesn't make any sense to me. Now that doesn't mean I'm going to completely stay away from oil related stocks. I'm invested in some as it is, and I will continue to stay in them. I don't plan on selling out. So speaking about the big boys, for me it's Exxon, Mobil and Chevron. They're the two that I am in, and I definitely plan on just keeping my positions, and who knows, I may well buy more if they see, you know, a decent decline. But I'm not going to be getting excited about these guys, you know what I mean? I'm not going to be getting scared either, but I'm not going to just start buying heavily because we've had a piece of bad news. The last couple of months has been bad news, good news, bad news, good news, bad news, good news. You can't just buy based off of one thing that's happening. I will dollar cost average the exact same way I do with every single company. It has nothing to do with the fact that they're in oil. A lot of the smaller guys though, as I said, I'm not going to touch off anybody with a share price below $20. I think it's just too risky. A lot of the little guys are going to struggle, and ultimately a lot of the little guys will sadly go bankrupt. Now with that being said, I am going to dig, I am going to research, I am going to look into some of these smaller companies, and I may well eat my own words, because if I find one who has, you know, an amazing balance sheet, very low likelihood of going bankrupt and immense growth potential, of course I'm going to buy them, and I'll let you guys know if I do find that dream company, because I don't see Exxon or Chevron being like, you know, an absolutely massive growth company. Despite this news and despite what happens next, I don't see any potential for immense growth. That's only ever going to happen if we get in on a company that, you know, not too many people know about. They're not spoken about in the mainstream anywhere near as much as the big guys. So I am actually going to dedicate a lot of my time, despite the fact I said I'm not going to invest anyone below $20. I might eat my words. I'm hoping I'll eat my words, but more than likely I won't. So guys, that is where I stand. Look, I'm by no means an expert. I just love making these videos and giving my thoughts on what's happening in the stock market right now. I say it about pretty much every stock that I speak about lately, to tread lightly. You know, don't get too excited, don't get too emotional. And I'm going to say the exact same thing about these oil stocks. Always do your own research, and only ever invest in a company if you're 100% confident in them. If you can invest in them and not see how your investment moves for the next 10 years. I bet a lot of people won't be able to do that with oil companies, because you don't have to be a genius to realize it's probably going to be a very, very, very volatile next few months. Look, obviously I'm not particularly happy about the news. I am in oil related companies and I expect them to take bigger hits than the rest of the market. But that's the risk that comes with it, and that's why diversification is so important. Never put all your eggs in one basket. But anyway guys, I hope that you did enjoy, and I hope you were able to take something from this video. If you were, please leave it a like, drop me a comment with your thoughts down below, and subscribe. Let's get to that 1500 baby, I'm excited. But anyway guys, until the next one, peace.